Hello subscribers, today is Saturday, July 30th, 2022. I'm recording this video slightly later than usual because of various circumstances that I couldn't control, but please hit the like button. This is exactly what keeps this channel going, and this is what makes this channel pop up higher in the search rankings. So do hit the like button, subscribe to this channel, share this video with others. This video will be slightly different than normally. You notice here that I'm going to cover treasury bond and yields, dollar, gold, oil, and natural gas in the subscriber only video. So if you're not a subscriber, consider signing up by going to the link in the description of this video. However, we will cover stocks in more detail this week, and we'll see if the bear market for stocks is actually over. Because strong resistance was overcome by at least major indexes. And also we see that there is a breadth divergence happening right now, and this is a bullish divergence, and I will show you what I mean there. Two major sectors of the stock market, energy and utilities, are already in the bull market and possibly leading the stock market higher. Generally speaking, utilities leading is a good sign. Healthcare is right behind them. Apple is testing overhead resistance and very close to new bull market. This is big because Apple is, well, enormous. And junk that also is dancing the same stack with stocks. So this is good, meaning that there's no divergences of any sort between the junk high yield bonds and the stocks. Bitcoin also could pop higher around 30% easily, but I think it's still in a downtrend. So we'll look at the levels to watch. If you are a subscriber, then stay tuned for the video. We will cover many various stocks and also cover some of the speculative plays that we've been doing. We've been trading as well, so stay tuned. Okay, looking at this chart, this is S&P 500 mini futures. Symbol is ES1 exclamation point. That's a continuous futures, meaning that price is basically continuous, even though you cannot technically trade it unless you have a contract for difference, CFDs, and we do not have CFDs in the United States, unfortunately. On this chart, notice that we are on a daily time frame, meaning that one candlestick, each of these red or green funny looking things, are 1 day's worth of activity. This is important to understand because I'm using my own proprietary MasterCharts trading price action indicators, and you can use them pretty much on any time frame, but you need to adjust your setting. So if you're going to be on daily charts, make it 250, and weekly use 52, on monthly 12, and if you're trading like an hourly or minute chart, I would keep it as 250. Okay, so looking at this chart, we are seeing that stocks dropped basically, and according to my system right there where I'm hovering 29th of April, stocks have entered the bear market. As a result, we were thinking about selling them short. There were two short signals. Some people actually took the short signals, and congratulations to that. Now, it seems like we're for now at least bottomed out here in mid-June, 17th, 16th of June, and started to kind of make our way higher. Finally, we have broken out above this red support resistance line. So notice the support resistance line was at 4077. Now, this red line usually acts as resistance for stocks, specifically stocks, when they're in a downtrend. So it seems like we have overcome this resistance, but we're still in a downtrend. In order for me to say that we're no longer in a downtrend, we need to close above this blue support resistance line. It is currently at 4369, and currently the stocks are at 4133. We are 5% away from new bull market. So you can understand that I have sort of, I'm hesitating to sell the stocks short because we're so close to bullish levels. And as this program continues, I'll show you more and more evidence that there is more and more possibility that this whole thing, from beginning of this year basically, is possibly over, and we can begin buying stocks again. It hasn't yet happened, so we need to be very careful what happens in the next few days, because it is entirely possible it will turn around and close again below this red support resistance line, because that is our signal. You notice here there was a signal on 31st of May and another signal on the 3rd of June, and it worked out really well. Will we have something similar? There is no way to tell. And if you're a subscriber to some other services, if they're trying to tell you that they know the future, of course they don't know the future. Nobody knows the future. But we can act on evidence. And in this case, there is still not enough evidence to say that we're no longer in a bear market, and there's not enough evidence to say that we're now in a bull market. So we're sort of in between. But in my thinking right now, I'm still thinking that we're in a downtrend. So I'm waiting for a short signal, something like this, another close below the red line. We have not had it yet. So let's wait and see what happens, once again, because we're so close to bull market levels. Same goes for Dow Jones. So Dow Jones also broke out above this red support resistance lines on 28th of July. If you need to find out more about these lines, you can send me a message here on TradingView, where I'm hovering. Private chats. You can also send me a message on MasterChartsTrading.com. That is right there. You can contact me when you click on help, and you can find out more about the indicators and how to use them to trade. These are the indicators, the green, blue, red, and yellow lines. Same goes for Dow Jones as S&P 500. We are pretty close to bullish levels. This is only, almost not even 4% away, and it's not a lot for stocks, or for that matter, any security. I mean, if it's a bond, then they don't move as much, but stocks 3%, 4%, it's not a big distance. So this is the reason why, if you're a subscriber, this is the reason why I've been so kind of hesitant to keep selling stocks short since probably mid-June. And right now, I'm even more hesitant to sell stocks short. Perhaps we're already, in a bull market. We just need to see the evidence of that. And evidence of that for me would be a close for Dow Jones or S&P 500 above. For Dow Jones above 34,135. This is the level. This is my bullish levels. And for S&P 500, the bullish levels are at 4369. So if we close above that, we are in a bull market, and we should again switch our thinking. Instead of selling short the rallies like we're seeing here, for example, for Dow Jones, we should start buying the dips. So like, for example, we would be buying here in January for a small run higher, but you can see that eventually we ended up in a bear market. So let's wait and see basically at this point. NASDAQ is sort of lagging behind S&P and Dow Jones, but we're not that far off. However, resistance has not yet been overcome for NASDAQ. So if S&P has overcome resistance, NASDAQ is still lagging, and actually the same goes for Russell 2000 small caps index. You can see that we're still quite a ways off from even clearing this resistance at the red line. So for NASDAQ, that resistance is at 13205, and for the Russell 2000 is 1948. Again, if you have my indicators for TradingView, this is my indicators, the green, blue, red, and yellow line. You can have the same indicators on your chart. Simply send me a message or sign up at my site. New York Stock Exchange Composite. So the reason why I put it there is so I don't forget to show you this divergence. Okay, so what's on this chart? And notice I'm using a different interface. I'm using currently StockCharts.com interface. This is TradingView interface. So for StockCharts.com, in the upper pane, we're looking at New York Stock Exchange Composite advances less decline volume line. Okay, so that's a mouthful. If you need to know what it is, go to StockCharts.com, click on Chart School, and type in advanced decline. So advanced decline indicators, how do they get calculated? So basically, we have a certain number of stocks within the index, in this case, New York Stock Exchange Composite. Some of those stocks are going up each day, some of the stocks are going down each day. So the advanced decline line is how many stocks are advancing plus how many stocks are declining. So we were subtracting the number of decliners from advances. And then what we're going to do is, we see how it says cumulative. We're going to change this, you see it says cumulative, type cumulative instead of candlesticks. If we leave it as candlesticks, it would not make any sense. It will just be candlesticks. But if we make it cumulative, meaning that what we're going to do is we're going to take yesterday's number. When we subtracted declines from advances, we got a number for yesterday, and then we're going to do the same thing today, and we're going to add this new number to yesterday. All right, pretty weird, right? But that's just the way it gets calculated. So that's advanced decline. In this case, it's advanced decline volume line. So we're going to take the volume and subtract it from the decline in volume, or the advances less decline volumes. Okay, so looking at this chart, it's one of my favorite breadth indicators because you can actually kind of use it. So notice that the breadth has been declining. Actually, notice where it started declining. Breadth topped out in June of this year. Notice where it's right there. Oh, I'm sorry, breadth topped out in June of 2021. That's a year ago. And ever since then, it's been slowly trending down. Stock market topped out 3rd of January, right there where I'm hovering. So at the bottom part here is the stock market. And then finally, so this was a clear bearish divergence. We got stocks that are going up, but the breadth was going down. Okay, so this is a clear example of bearish divergence. I was quite worried about it. If you listen to my videos from last year and from early this year, I was saying that this is not a good sign. Eventually, this caught up with us. It caught up with us, and we saw a strong decline in the stock market. Okay, so it looks like right this instant we have possibly bottomed in early June here where I'm hovering. Now notice that the breadth actually made a higher high right there. So where I'm hovering, it says the previous peak right from like mid-May was negative 1584, while the peak right now is negative 1490. So we're slightly higher. In other words, this is bullish. We made a higher high here for the breadth. We have not yet made a higher high for the stock market itself. This, generally speaking, again, is a good sign if you're a stock bull. So most likely this high is from May. We can look at the weekly chart, for example, of S&P 500. So it looks like this high is from 31st of May. Will likely be challenged in the weeks ahead. So it feels like there is more upside left. And once again, because we're so close to the bullish levels, we could just pop into the bull market. And in that case, this whole, basically we're done with the bear market. However, it hasn't yet happened. So once again, bullish divergence is good, but it's not the way to trade. It's just the way to analyze. So right now I am the evidence is piling up that there is a good chance that the stock market will enter the new bull market once again. More evidence that there is now more bullish behavior for stocks if we look at XLU utilities fund. So XLU utilities did the same thing more or less as the general stock market. We did enter a bear market where I'm hovering 17th of June. So at this point we say, okay, this is it. But this was actually basically it. And now we have made a new, notice how a few days ago we actually gapped Notice this big gap here. We gapped above this blue support resistance line. We gapped above this previous high. We are now in a new bull market for utilities. Okay, what does that mean? That means that if S&P 500 was also in a bull market, I would be buying it right this instant, right around the blue line. But it hasn't yet happened, so I'm reluctant. So I'm showing this to you so you understand how to think and how I think. So evidence is increasing that the bull market is here in general stock market. So utilities leading also is a good indicator because it looks like the interest rates are at least stabilizing, and utilities usually borrow lots of money, and so for utilities having low interest rates is a good sign. And in general, low interest rates is good for stocks, but that's not a very absolute statement. Energy, XLE, never entered the bear market. We actually traded energy. So alert was sent way back when in August 2021. This big run up. We would have been out like right there on 17th of June. But again, we would be in right now. Again, the reason why I'm not really buying it right this instant is because the general stock market, S&P, hasn't done the same thing. See, if S&P did the same thing as I'm hovering right now, closed above this blue support resistance line, I would be buying energy right this instant, but it's not. So again, this is more for to sort of combine as much evidence as possible and see are we now entering a new bull market for stocks. Same goes for XLV. So XLV Healthcare. Notice here again, this to my subscribers. Caution. I sent caution on May 2nd, meaning that we are potentially entering a very dangerous territory. So consider, getting out of basically of the stock, unless you already got out. You should have been out like a while back if you have profitable position. So this is more like if you don't have a profitable position. And here on 10th of June, this is an absolute runaway kind of signal. So avoid. This is for me meaning run away. However, notice this was relatively short-lived again, and now we're kind of trending upwards towards the bullish levels. Where are the bullish levels for XLV Healthcare? It's just there, very close. So we're right now at 132. Bullish levels for XLV is at 134. It's $2 away. So very possible that another major sector, healthcare, will enter a bull market. If it does, that will be the third sector to enter bull market. Utilities, energy are already there, and healthcare could be the third one. The rest of the stock sectors are still in a bear trend, and we will, again, take it one day at a time to see whether or not the stocks have indeed turned around. Some of the important stocks that we also watch is Apple. So Apple did the same sort of similar thing, dropped into caution phase here on 12th of May and then into an avoid phase on 10th of June. Since we do not know the future, we need to exit at this point, because I have seen this time and again that if you don't exit here, the stock collapses. It's just like a Murphy's Law, basically. If you do exit, then the stock rallies. There is no way to know the future. So vast majority of the time, when we close below this yellow support resistance line, there is a good chance we'll keep going lower and lower and lower. At this point, it looks like we are not, and we're literally challenging these bullish levels right now. I'm going to zoom in so that you understand how traders think, how people who read candlesticks, these are candlesticks. So notice what happened here from 28th of July to 29th of July, from Thursday to Friday, there was a gap. This is a significant gap. This is a about 2% gap. And then in the morning, so yeah, there was an earnings gap, earnings report, earnings surprise to the upside. However, if you're a subscriber, I'll show you Amazon, where earnings surprised to the downside, yet stock gapped to the upside. So I wouldn't necessarily look at earnings that much. I don't really look at them that much because for trading purposes, they're almost meaningless. In fact, they're quite counterproductive because it sort of freaks people out to buy into earnings or buy before earnings, etc. Just look at the chart itself. It's so much easier. So looking at this chart of Apple, I mean, we're there. We tried to get above this blue support resistance line. So far we have failed, but I mean, it's by a few cents. The blue line is 162.73 and Apple is at 162.51. So we're like right there. So Apple is a big company. If it goes back into the bull market, that's a big sign. And that's also a big problem for bears, for people who think that we're going to continue lower. This is a major stock and it's a major part of the stock market. So again, we need to be aware of this, especially if you're a bear, if you're a stock bear. And I'm neither a bear or a bull. I'm just currently more bearish on stocks, but I'm also very objective, in my analysis. I'm looking at the chart. I'm not really looking at my wishful interpretation of this chart. Looking at junk debt. So junk debt, I keep saying that junk debt, high yield bonds, and stocks, generally speaking, move together in lockstep. So when stocks are going up, junk debt should be going down. When junk debt is going down, stocks should be going down. And it's a normal relationship. So on this chart, one of the reasons why I was but somewhat reluctant to sell short stocks, especially around this 14th of July area, so about 2 weeks ago. If we look at, I'm gonna just kind of go back and forth between S&P and junk debt. So if we look at S&P, here's 14th of July candlestick. Here is the 14th of July candlestick for junk debt. So notice that we made new lows here on 13th of June, but we didn't make a new low on July. And so that was a sign to me that since we're not really making new lows, and especially since we're not making new lows in both of these securities, in junk debt and the stock market itself, it showed to me that there was no divergence. No divergence for stocks with junk debt is good. We want to be doing the same thing basically, because if there is a divergence, as for example, let me show you. So junk debt made a low 10th of June. Well, there was a divergence for junk debt earlier. So for example, bear market for junk debt started in January of 2018, in January of this year. I'm sorry, it's 2022. And the stocks were still way up next to the highs, you see. So that was a big, something was happening. I mean, notice how much junk debt was already below the yellow line here in January, and stocks were like way up there still in the beginning of this year. So when the junk debt started going lower, I'm like, something's wrong. And yes, we unraveled eventually. It just took a while for the stocks to unravel. So what we're seeing right now is the high yield bonds are not doing this divergence thing. We're working together. So we're working together to move higher. Now junk debt is approaching this level, the red support resistance line. This is strong resistance. Let's see what happens when it gets there. So right now S&P did clear that level, and we could actually continue higher. So hopefully junk debt will confirm this move higher. And let me see. So we got junk debt. And basically I wanted to look at Bitcoin because the rest of I just don't have the time right now. I'm going to cover them for the members only video. So Bitcoin, very briefly, I'm going to cover Bitcoin. If you need coverage of bonds, dollar, gold, oil, and natural gas, and also a whole bunch of other stocks, then consider signing up at MasterChartsTrading.com. Currently Bitcoin, so what's happening with Bitcoin? First of all, where did we come from to this level? We began our downtrend right there where I'm hovering in January of this year with multiple opportunities, 4 in fact opportunities to sell short. Final opportunity was just a blockbuster trade with 61% in our favor. Stock or the Bitcoin dropped from 46,000 towards 17,000. That is a very big gain if you were shorting it. For example, via options on ETF called BITO or BITO. Okay, so you can actually buy put options now on this thing, whatever it is. Right now, so why am I somewhat bullish? No new lows were made recently. So the latest low was here in June. We did not make a new low in early July here, and we kind of rallied a little bit. So where did we rally to? So we rallied to this yellow support resistance line. And we're literally, as we speak, because this is a live chart, you can see we have 6 hours left today on Saturday. We're trying to break above this yellow support resistance line. I think if we break above it, there's a very good chance we'll continue the rally towards the red line, which is at 33,000. So we're from 24 to 33. It's around 33%. It's not a bad move. I'm not gonna actually play it because currently I think we're in a downtrend. So when or if we get to the red line, we could consider selling it short, selling Bitcoin short. But right this instant, I don't want to bother with it. Unless you are more of a short-term trader, in that case, possibly I would buy it here on close above this yellow line, which is at 24,582, 24,582. If we close above that level, there's quite a good chance we will continue higher towards the 33,000 level. If you are interested in what I have to say, and also if you're interested in these indicators, so the green, blue, red, and yellow lines, again, it will just tremendously simplify your trading experience. You can have this on your TradingView chart, TradingView.com. Go to MasterChartsTrading.com, click on sign up for one of the products. I basically have 2 products. One is trading indicators, one is newsletter. So the trading indicators are these lines, like I just said. The newsletter, I send out daily newsletter that also has a weekly summary email on Fridays, and they are $29.95 for the indicators and $39.95 for the newsletters. But I think the best deal, of course, is to get both because you get a discount. And $59.95 per month, this is basically what people mostly get here. If you are interested in one-on-one sessions, we can do it over Zoom. So 60-minute one-on-one session, monthly, 1 hour session. You can sign up for that as well. That's it for this week's recap. If you have any questions, please let me know. Please hit the like button. Don't forget to hit the like button. Seriously, this is the only thing that keeps this channel going. So please don't forget to hit the like button and of course subscribe to this channel. Thank you for watching and have another great trading week. Bye-bye.